Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe the channel and to see the playlist section of the channel where I have uploaded the lectures earlier. Today I am going to discuss a problem on process costing. I would like to request all the students to communicate with me through email which I have given in the description box. Please give your valuable comments so that I can develop the channel for the benefits of the students of commerce. Naitik Limited provides the following cost data of a particular product passing through two manufacturing processes, process A and process B. Input 8,800 units and the cost is 9,59,200. Material under process A 46,500 and under process B it is 93,680. Labor cost rupees 1,45,000 and rupees 95,000 for process A and process B respectively. Electric power rupees 48,000 and rupees 32,000. Normal loss in process A is 5%. And normal loss in process B is 4%. Value of scrap per unit rupees 10 under process A and rupees 12 in process B. Other manufacturing expenses are rupees 1,68,000 to be charged on the basis of labor cost. You are required to prepare process accounts, abnormal gain account, abnormal loss account and normal loss account. Here I am preparing the process accounts. So in the books of Naitik Limited, process A account. So on the left side I am writing particulars, then you will write the units, then rate and then amount. And on the credit side I am writing particulars, units, rate and amount. So on the debit side I am writing to input. So this is the input is maybe the material or it can be a cost that is taken from any other process. So I am writing to input. So 8,800 is the number of units which was introduced in process A and the cost of these units is given in the question as 9,59,200. So I am writing the units of rate and amount as rupees. Then it is given that material is introduced in process A and the cost is given as 46,500. Then to labor, the cost is 1,45,000. Then to electric power, and the cost of electric power in process A is 48,000. Then to other manufacturing expenses, other manufacturing expenses. Now it is given in the question that total other manufacturing expense is 1,68,000 that will be allocated to process A and B in the ratio of labor cost. So labor cost in process A is given as 1,45,000 and the total labor cost for process A and process B is 1,45,000 plus 95,000. So 95,000 is the labor cost for process B. So if you calculate this 1,68,000, that is the total manufacturing expense will be allocated to process A and process B in the ratio of labor cost. So if you calculate this value, you will get 1,01,500. So this is the total cost that is incurred for process A. Now there is a normal loss. So I am writing the normal loss on the credit side as by normal loss. So it is given that the normal loss in process A is 5%. So 5% of 8,800 units is 440 units, and this number of units will be sold as scrap, and the rate of the scrap is rupees 10. So 4,400 is the value of this normal loss that will be sold for cash as a scrap. So the balancing figure represents the number of units that could be transferred to process B account. So the balancing figure is 8,360 unit, and the total value. So here on the debit side I am writing 8,800 units, and the total cost incurred for process A is 13,200,000. So I am writing it on the credit side also. So 8,800, and on the amount column I am writing 13,200,000, and the balancing figure is 12,95,800. So this will be valued at 155. How I arrived at this figure? This is for your understanding. 12,95,800 divided by 8,660. So this is 145. So this balancing figure or balancing units is valued at 155. Now to balance BD, here I am writing as 8,360, which is valued at 155, and 12,95,800. Now you can see in the question that the number of units which is transferred to process B account is 8,300. It means that there was an abnormal loss of 60 units. So I am writing here by abnormal loss 60 unit, and by process B account 8,300 units. So these two units, or that is the abnormal loss and process number of units which was transferred to process B, that is 8,300. So both this figure will be valued at 155 per unit. So abnormal loss, the value of abnormal loss is 9,300, and the value of the finished or the stock that is transferred to process B account is 12,86,500. So on the debit side I am writing 8,360, and here I am writing 12,95,800. And on the credit side I am writing 8,360 and 12,95,800. So this is the process A account that I have completed. Now I am going to prepare the process B account. So here I am writing process B account. So on the debit side I am writing particulars, then units, rate, amount, and on the credit side I am writing particulars, units, rate, and amount. On the debit side I am writing that to balance BD, so this value will be transferred from process A account, that is 8,300 unit, and valued at 155. So this is 12,86,500. Then material was introduced, so I am writing to material, This is 93,680. Then to labor, this is 95,000. To electric power, this is 32,000. Then to other manufacturing expense, this is calculated as 1,68,000, which is the total other manufacturing expense, into 95,000. This is the labor cost for process B divided by total labor cost of process A and process B, which is 2,40,000. So you will get 66,500. Now the normal loss in process B, it is given as 4% of the input. So 4% of 8,300 is 332. And this can be sold at scrap at the rate of rupees 12 per unit. So the value of normal loss is 3,984. So the sum of the cost which is incurred for process B is 15,73,680. This is the total cost incurred, and 12,86,500 is the cost incurred in process A, and this is the value addition in process B. So here I am writing 8,300 and the total cost as 15,73,680, and this I am writing as by balancing figure. So by balance CD will be 7,968, and this is 15,69,696. So this is valued at rupees 197. So how I have arrived at this figure, that is 15,69,696 by 7,968. So you will get 197. So this figure will be brought down. So to balance BD, I am writing here 7,968 and 197 and 15,69,696. Now it is given in the question that number of unit transferred to finished stock, that is I am writing as finished stock. By finished stock, this is 8,000 unit. It means the difference between 8,000 unit and 7,968, there is an abnormal gain. So I am writing here to abnormal gain account. So this is 32 unit. So both this finished stock will be valued at 197 per unit, and abnormal gain also at 197 per unit. So abnormal gain value is 6,304, and the finished stock is valued at 15,76,000. So sum of the debit and the credit side you need to write here. So you can see that I have completed drafting the process A account and process B account. So it's time to prepare the abnormal gain account, abnormal loss account, and normal loss account. So here I have prepared the abnormal gain account, abnormal loss account, and normal loss account. The structure remains the same as I have prepared for process A and process B account. Now I will request all the students who are viewing this lecture to follow how I am preparing these three ledgers. So first I will draw the normal loss account. The normal loss in process A and process B, the normal loss is recorded on the credit side of both process A and process B account. So I have to transfer from process A and process B account to normal loss account. So here I am writing to process A account 440, 10, 4,400. And to process B account, 332, 12, 3,984. You can see that abnormal gain is recorded in process B account. So I am transferring it from process B account to abnormal gain account. So here I am writing by process B account, 32 units, 197 and 6,304. And the abnormal loss which is recorded in process A account, I am transferring it from process A. So to process A account, that is 60 units, 155, 9,300. So first of all, I am going to close this abnormal loss account. So this 60 units will be sold as a scrap, and per unit value of the scrap is 10. So 600 rupees will be realized by selling this 60 units as scrap. So the balancing figure will represent or will be transferred to costing profit and loss account. So by costing profit and loss account. So here I am writing 60 units, 9,300 amount on the debit side, and here I am writing 60 and 9,300. So what is the amount that will be transferred to costing PL account? This is 8,700. Clear? Now you see how I close this normal loss account. So the units of normal loss recorded in process A will be sold as scrap. So by bank account, 440, 10, 4,400. And the units of process B account will be sold as a scrap. There are 32 units in process B account which is recorded as abnormal gain, because normal loss was recorded as 332 unit, but actual loss was 300. So 32 units was collected as abnormal gain. So the number of units that will be sold as scrap from process B account will be 300, and by abnormal gain. So you can see that in normal loss account, I am segregating these 332 units as by bank 300 units, and by abnormal gain account 32 units. These 300 units will be sold as a scrap at rupees 32. So this is 3,600, and the abnormal gain of 32 units will be valued at rupees 12 per unit, and this amount is 384. So you can see that on the debit side, the sum total of units is 772, and the amount is 8,384. This is 772 and 8,384. Now this amount of abnormal gain which is recorded in normal loss account will be transferred to abnormal gain account. So here I am writing in abnormal gain account to normal loss 32 units, 12,384. So the balancing figure in abnormal gain account will be transferred to costing PL. So 32 units, here also 32 units, 6,304, 6,304. Here I am transferring the amount or the balancing figure in the abnormal gain account to costing profit and loss account. So this is 5,920. So I expect that all of you have understood the solution, and please try to follow the way I have done it here. Thank you. Thanks for watching the lecture.